Hey everybody, and welcome back to this week's edition of Josh Lioce's video blog. Today we're speaking to buyers out there who have a home to sell. You often find yourself in a tough position because you write an offer that's subject to you selling your home, and you find yourself on the short end of the stick of typically not getting that offer accepted. So today we're here to talk about a bridge loan and how you can use a bridge loan to help you get that home and drop that contingency and win the deal that you're looking for on that perfect home. So stay right here. We'll be right back. All right, welcome back. So we have our sponsor and our specialist and our mortgage guru, Rick Scherer, here with us from Onto Mortgage. Rick, thank you for joining us.
Yeah, man, thank you so much for having me and back on your video podcast, and excited about it.
We love having you. You're a wealth of knowledge. So one of the things we wanted you to talk about today, because it's not out there a lot. There's not a lot of, I think, companies or mortgage companies offering this tool. And the second reason why is we're obviously having a lot of people who run into this problem, right? So they're going to buy a home. They have to sell their home first. We write the offer. They don't get the deal. And a bridge loan is this awesome tool that helps us get away with that. So I wanted you to come in and explain to the consumers exactly what a bridge loan is and how it can help them.
Yeah, we definitely saw a need for this product in the marketplace, especially today's marketplace, right? Because clients know they can sell their home really fast. However, because of this explosive appreciation people have had, all of their cash, all of their money for a down payment usually is trapped inside this house. And so what we've done here at Onto Mortgage is we've created a bridge loan program, which allows us to gain access to the money that's stuck inside these people's homes. So let's say a home buyer is looking to sell their home, and the property is worth $500,000, and their mortgage is only $200,000, right? They've got what we will do is we will come and we will give them a loan on the equity in their home, so they can take the equity out and use it towards their down payment on the next home. Oftentimes what we're able to do is allow them to be non-contingent. Now they don't have to be contingent about selling their current home, because now they have gained the access to that cash. And so they can be, right on the top of the pile on the offers when they're submitting it.
The question I have is, when do you decide that this is an option for them, and how do you kind of go through the process? First thing that I think about is, okay, does this stall if we're writing an offer and somebody is pre-approved, but that they find out, hey, maybe this is an option? When should all this be done, and how does it impact the timing of writing an offer on something?
Yeah, no, so really we want to have this conversation right at pre-approval, right? So we're doing the analysis on the client situation, going through what a bridge loan would look like, how they'd be able to gain that, to get that equity in order to put down on it, make sure they qualify, right? They've got to qualify carrying both properties, which we've seen, hasn't been a problem for a lot, but really getting all of that out in the open up front. Because as you know, Josh, it's who's the prettiest peacock, right? When you're putting these offers in. So we want to make sure we go in strong, no contingency on selling the home. And we really try to get clients plan A and plan B, because oftentimes having the option to do a bridge loan is there, but them using you guys to list their home, 9 times out of 10, you'll be able to sell that property at the same time, right? It's right. Really going in, so at least you don't have to be contingent on it, but at the same time, you might be able to sell at the same time, or we use the benefit of the bridge loan so that you can not have that seller worry about, oh man, are they gonna be able to sell their home in time?
So one of the things I think we do from a timing standpoint to let consumers know is we have people get approved for this process, right? Approved for this loan, where they can go in and they're approved for the bridge loan. They can go in and they can write an offer that's not contingent upon the sale of their home. So what we do is we get their home ready at the same time. We're doing the valuation, we're doing the pre-marketing, we're getting everything staged. So once they find that house, they write that offer. As soon as they get through the inspection, we're ready to list the home. So typically we give it a 30 or 45 day out from that inspection time frame, which is sometimes enough time to get their house under agreement and sometimes even closed within a day or two. It doesn't always happen that way, but it certainly eliminates even the concern of having that bridge loan. But My second question, or my next question is, let's say that doesn't happen. Let's say they buy the house, they don't list their home yet because they need a little time. Explain what the closing looks like, explain how much time people have, and, are there 2 mortgage payments, are there 1? Kind of give a little bit of that back end piece of it once you close on this property.
Yeah, absolutely. So, On2 Mortgage funds the bridge loan at the closing, right? So you're going to be funding the bridge loan at the same time you're buying the other property. We show up with the money, so you have your down payment to give to the seller and move on. The bridge loan is a really great program. We like our bridge loans to be about 60 days. Certainly, we have the option for people to extend it up to 120 days. And the clients are only paying interest on the days that they need it, right? Client only needs it for a week, right? They're paying the interest for just a week of time that they're holding it. If they need it for 2 months, same thing. So it's per day interest. And it's just to bridge that gap in that time from holding one mortgage and the other. And it's a great tool to have in your tool belt when you're going and making those offers.
Awesome information. Last question. When you go to close on this, is it 2 separate closings? And what's kind of the closing cost impact on having this additional loan?
Yeah, so the closing cost on the bridge loan is a straight $750, and that handles all of the paperwork, all of the legal stuff, and it happens at the same time as your purchase closing. So the same attorney executes both documents, and it works in a way that the attorney has the funds for the first mortgage and has the funds for the second mortgage, putting them together and allowing you to purchase that next property.
Awesome. Great information as always, Rick. Thank you for being here.
Of course, man. Thank you.
Well, everybody, if you're a consumer out there and you've been struggling to get your situation squared away, you've been struggling to get your offer accepted on a home, you don't know what steps to take because you do have a home to sell, this is the perfect situation for you to reach out to certainly us or reach out to Rick Scherer directly. His contact information will be on the very last screen of this video. Reach out, talk to him, go through the process. You'll be able to find out if you qualify for that pre-approval to get that bridge loan, and what the process looks like in a little bit more detail. And maybe you're ready to take that next step and go find your dream home. If you have any questions or you want more information, obviously reach out to Rick directly, or certainly reach out to us anytime. We look forward to speaking with you more on this, and we certainly look forward to seeing you at our next video. Have a great week, everybody.